But in my opinion, Stephen Miran is the perfect outline of the kind of guy you want on the Fed. And the reason why I say that is he's got all the horsepower. He's an Ivy League guy, but grew up in a much more blue collar background and ran a hedge fund, managed money, right? He hasn't just lived in academia.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots. And I'm joined as always by the old brain trust himself, Mr. Chase Taylor. Almost Daily Dots. We got caught in a pinch yesterday, and I told you I was going to handle it, and I missed them. So the mostly Daily Dots will be the revised title here. And if you see any people traversing my background, I am still working from the home base, soaking up the last bits of summer here. So anyway, kind of feel like it's a little bit of a strange market in the sense that I don't really think there's anything really big or notable going on, and yet at the same time, I think there's some really big and notable things going on. So why don't you give us a rundown on the indexes, and then we'll get into the Fed and earnings and all the other kind of stuff going on.
Yep, S&P closed basically flat, down 0.08. Q's up 0.34. Small caps down 0.33. Eco 8 was flat. Mag 7 up 0.37. Good day for XUS with all world XUS up 0.71. Dollar down 0.15. Oil is essentially flat, so gas close enough. Gold up about 1.2, silver up about 0.7. As far as yields went, you're up 1 basis point on the 2, flat on the rest. Well, you're up like 2 basis points on the 10, but flat on the 30. And that was despite a really bad auction. So somewhat notable that you had a terrible auction and the 30-year stayed pretty flat. And then vol finished the day up about 1%. So it was an interesting day. We were up big. Next thing you knew, we were down, and then we kind of closed flat. So
Yeah, uh, it really it's a very we've been saying for a while now it's a really complicated setup. That certainly hasn't changed. It's also a very you just feel like the different kinds of things going on. The outcomes seem so numerous. Um, it's a hard map to play, but I think the thing, and everybody, when I say this, everybody's going to roll their eyes, and be like, "Oh, here he goes on fundamentals again." But I think I think I stumbled onto something, and we've discussed it before. But I think one of the biggest issues happening in this market right now is I really do think retail has got the reins. Um, I think that they are making up. I think you've got the whole passive, conveyor belt rolling as always. And I think that at the moment, I think retail is making up the majority of the marginal buyers. And it's looked like that for a while, Chase. But I think one of the reasons that I'm more convinced of that ever, and it's a little anecdotal, but kind of follow me. I feel like you're watching stock moves that are completely and so I'm not saying too big or too small because they're so disparate, but completely detached from reality, right? So like looking at Apple the other day, Apple on the day, if you included after hours, was up almost 10%. Okay. They were up almost 10% when they were already trading at 32 times earnings. They were up 10% on an announcement of something that will compress their margins and make them spend more money. And then you sit there and go, okay, because they announced moves that will squeeze their margins. People go, you don't know that. No, Apple knows that, which is why they're not making those things in the United States to begin with. Okay, so I'm not.
right,
This isn't from me. I'm looking at Apple going, if they thought that they could make more money here, that's where they'd be doing it. Right. Period.
right. They would have already
So
had all the factories here.
right, 100%. Okay, so and then you sit there and watch the stock rally on 10% for that because they're in Trump's good graces. They're a company that's not growing, whose main flagship product is ceding market share to everybody. Okay, so announcing a move that is going to squeeze their margins again, like if they were in the doghouse with Trump and trading at 15 times or 16 times earnings, and this announcement hits and the stock pops by 10 or 15%, I get it, right? Because I mean, clearly, I think if you're a CEO in corporate America today, you want to be on Trump's good side, and that's not a. And I don't mean that as a political statement. I mean that as he is a more actively involved type of executive, and but a company that's not growing, that's got the weakest margins to begin with, in
To be fair, they're growing at 6% these days.
I mean, it's funny. We got our news in on our South American airliner. Our South American airliners cranking out 3% better margins than Apple. And the stock rallies 10% on that. So my point in saying that is I don't think retail alone can carry this market. Uh, and I think retail is very mispositioned. I still don't see the bottom opening up and some giant stock crater coming. But I also do not see what retail is seems to be positioned for right now, which is just another runaway market. And I'm not saying we won't see it again. I just think if you want to see a big move to the upside, it's got to happen from lower levels, or something has to change on the macroeconomic picture because uh, eh, I mean, granted, I don't think earnings are the biggest driver of stocks and haven't been for a while, but like you look at Tesla's trading much the same way, where it's not that I don't agree with the way it's trading. The way it's trading doesn't agree with the news. You know what I mean? And Apple's kind of the same thing. And again, I'm not saying that both those stocks should be cratered. I'm just saying you're watching this euphoria around the retail names, but the backdrop is decidedly different. The other thing I think is this market is grossly overestimating the impact of rate cuts. I just think you're
Yeah.
kind of in a tough economic spot with a very richly valued equity market. And I don't, like I said, I don't see a black hole opening up and just swallowing everything. At the same time, I think a really meaningful, forceful rally without something substantively changing, I just don't see it. And that looks like kind of what everybody's banging the table for.
Yeah, and to your point, we definitely have seen. I just saw Aaron Chopra today shared basically the Google trends. He's how many people are searching for like stock trading, and it's soaring just like it did in 2021. And you can see it. We've talked about it on the show, like which names have done what. You can tell a lot of that's coming from retail. And just for an anecdote, I was playing some basketball with some young bloods at the YMCA yesterday, and uh, one of the guys was leaving, and he said, "Yeah, I got to go back in front of the computer for a few hours." And one of the other guys was like, "Oh yeah, you go trade stocks." First of all, it was after the close, but whatever. Um, he's like, "No, I actually have to do like real work." And the kid was like, "Oh, you should just trade." And I'm just like, "Well, that sums up sums up America right now."
Yeah, it really does. And the one thing that kind of gives you pause, if this was 15, 20 years ago, I'd be up on my chair right now screaming bubbles, sell everything, short everything. The one thing that I think that we have to think about, two things. And Mr. Fundamentals, right? Everything's too expensive. I'll acknowledge something here. Now I think it is unsustainable, but um, if we're looking for historical comps, all the hardcore fundy guys out there need to realize that, and again, we've touched on this before, but the market is not as expensive. Look, it's very expensive, but it's not as expensive as it looks when you consider historical profit margins and where we currently are, right? That's a
True.
fact. Um, you've
Not to
got
mention
company.
M2, as we've talked about before. Like just you divide it by money, and it's really not that big a deal.
Right. But there's also a cultural difference, which you and I have discussed before as well, which is everybody has a trading platform now in their pocket, and this country's addicted to gambling. And you're like, well, use trade stocks. No, no. Look, you can gamble on anything. Okay. What you and I do is decidedly different. We're managing risk. We're making trades, but we're investing, right? We're investing based on themes, fundamentals, valuations, all that kind of stuff. What you see the vast majority of people doing right now Don't kid yourself. And if you're doing it too, and if you're trading stocks, if you're out there trading stocks, and when you hear me say a stock is expensive and you look at that stock and you go, what are you talking about? It's under $100. You're a gambler, right? You're a gambler. That's a really good litmus test. And look at DraftKings. Look at. Do you know that
Whose stock it look like chart looks great, by the way.
I bet they're soaring right now, right? I think you brought this up that Gamblers Anonymous groups are overloaded. Like you can't even get into one of these things, right? Um, and so I think for those, these are the kinds of things, these are the stories that I tell myself to kind of steel myself for substantially elevated valuations going forward, because I don't think this culture is all of a sudden going to decide it doesn't like to gamble. Um, Unless there is a giant morass or collapse somewhere that massively impacts our economy, I don't think you're going to see a massive stock market pullback, not based on what we can see at this point. Now, would a 15 to 20% pull? Yeah, but that's routine, guys. Like that happened. 15 to 20% pullbacks used to be part of the game,
Yeah,
right?
we already had one of those this year. Like,
Right. Yep. We already had one. So those can happen anytime. I'm not talking about that. I'm talking about, real damage. Um, and unless you see some of those factors slip, but the flip side is, and another thing that we discussed that we thought would be a potential outcome, if you go back and look at the 1 year chart on something like Apple, I think it's up like 6%, you know? And I kind of think, go look at the 1 year chart on Tesla, not doing much better, right? Go look at the 1 year chart on Google, which unfairly, in my opinion, is not doing much better. I think these things are running out of runway, and I don't think enough investors are paying attention. They clearly aren't, because there are some sectors in this economy, in this market, that are doing incredibly well, that are trading at ridiculously low valuations. Um, and once again, I just think it's kind of a story of the vast majority of investors out there just chasing the wrong story.
yeah, I don't think I have anything to add to that.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
Okay, what did you notice today? What caught your eye? And then we'll get into the appointment of I don't know, a guy that we both know to the Fed board. But before we get into that, what else did you notice today? And did we see any data out?
Yeah, we did have some data. Nothing that was particularly notable, other than maybe jobless claims, and for continuing jobless claims, that kind of hit a new cycle high. So that had cooled off a little lately. It's back to uncooling off, which, but initial claims, I mean, they just refused to like really budge. So we're still kind of in this no hire, no fire kind of labor market. Clearly weakening. Clearly, you know, it's sketchy, but hasn't like completely fallen over. But at the same time, we know labor is essentially, you know, a bit of a lagging indicator. So that I do worry that it could snap. But and I think it's worth noting, you know, all of a sudden it looks like Waller is going to be the Fed chair. He's the new favorite anyways in the horse race. And you know, the argument he's been making is kind of like, look, yes, like labor market's not bad yet, but like, man, it's on the precipice. So if it starts to go, if by the time we react, it's too late. And you know, that is a totally fair argument on his part.
And you know what, man, that's the one part of the job of the Fed that I'm very sympathetic to, because when you get into situations like this, to be fair to them, which I'm usually pretty hard on them, they're kind of damned if they do, damned if they don't.
Yeah.
Right? If they cut the perfect amount at the right time, the criticism will be you didn't need to cut. Right? If they don't cut and wait for the economy to prove it to them, they're the idiots because they should have seen it coming. Like that,
Yeah.
that's the one part of
I,
monetary policy that I've
I,
got a lot of.
I think Waller's argument is solid, and I think Powell's argument is solid because you know, one guy's saying, hey, like labor can break any minute now, let's get ahead of that. The other guy's like, cool, but inflation can go to 4 any minute now, so let's get ahead of that. You know, and I don't think either side's crazy. Like the two dissenters in the case they made, and it wasn't like some weird, you know, just like sycophancy, like, you know, to suck up to Trump. I mean, I think Waller's doing that a little bit, but at the end of the day, like there is a case to be made there. It's just there's a case to be made, on the other side. But I thought that was great. Like, and Powell alluded to that. Like, it was a great meeting because they had like real debate. Like, um, they're gonna have more of it next time because it looks like two people probably have flipped over to the other side. So now it's getting a little more evenly distributed between Hawks and Doves. Granted, at the moment, everyone, I wouldn't say thinks, I'd say knows they're cutting in September, but from there, it probably gets a little more murky.
You know what I find really frustrating, man? I would love to be able to have a scenario where we could hear Powell and or Waller in kind of a long form interview where you could actually hear what they wanted to say. For instance, when we're sitting there talking about Powell's outlook on interest rates, I would love to know if part of his outlook on interest rates is based on Trump administration policy.
He's
Meaning,
he's
I
he's made that clear. Yeah, I
yeah,
mean they all do a bunch of speeches, so it's not like we don't know what they think.
no, I know, but it's hard because you don't know whether they're serving up a meal that they think everybody in the cafeteria will like, or whether they're serving up a meal that they think everybody needs to eat. You know what I'm saying?
Yeah,
And he's alluded to that on the tariffs. I haven't heard him, and maybe he has. I haven't heard him talk about the big beautiful bill. I haven't heard him talk about how it looks like there will be at this point, it looks like there will be very little constraint on increased spending. So it kind of makes you wonder, okay, I'm looking at these, where maybe Powell's sitting there going, hey, normally, Waller, I'd agree with you and I'd be down for 50 points here. But when I add these other bricks into the picture, right? Or I add these other stones into the wait, why am I blanking on that? What is that called? Where you put all the different little colored rocks and you make the picture, the mural, the what is it called? I'm just blanking out here, Chase.
well, your
Wait,
blanking led to my blanking, so
way to pick me up on that one.
you're
Uh,
welcome. It's like when someone can't
uh,
remember a word and then you're like, oh crap, I can't remember it either. It just
yeah,
happens.
I
It's
know.
like contagious.
It is. It's like a sneeze. Sneezes are contagious, by the way.
It's true.
Uh, See, these are the things that you're going to pick up here. These random, little pieces
Yeah.
of valuable knowledge. But yeah, I would I would love to be able to hear him talk freely, and I understand that that will probably never happen, but I think it should. And you know, Trump catches a lot of flack in a lot of cases, rightfully so. The one thing I do appreciate about the way that he communicates, though, I wish it would be done with a little less vitriol, and I wish it would be done with a little more restraint. But it is nice to be able to hear what you really have to assume are the honest thoughts of an elected official. And I wish we could get more of that. I again, assuming that it was done with a little more restraint,
Right.
a little more
But
deference.
right. I totally get what you're saying. Like seeing behind the curtain a little bit and trying to like actually understand someone's like thought process is nice. Just nothing's worse than the folks in power that every second that they're talking, you just know it's just basically all theatrics and show, and like that, it's just the worst. Like, and no
Yeah,
one's no one's obviously worse than that historically than the central bank.
yeah,
It's like the famous quote I think from Greenspan that like if you understand me, then I said it wrong, basically.
yeah. Well, hey, to that note, though, I think that we got some really encouraging news. Now, I don't know the entirety of the story, but you and I have both been advocates for a really long time that we both believe that we need a central bank, but we believe that the composition of that central bank desperately needs to be changed. It looks as though Trump has appointed a new member to the Fed board of governors, right?
It,
But it's a temporary appointment,
yeah,
right? It's only a four.
it'll be through January, so it's like 5 months.
Is he giving him a trial run? Is that effectively what this is?
I the thought process was to just now it may turn into that, but the thought process was just have someone fill in for a little while and then have the new person take over next year. And I think that person might end up being a shadow Fed chair for the 4 months or whatever. But he's going to get two next year because he gets that one again, and then well, theoretically Powell's if Powell leaves the board, I guess.
Look, I don't know the guy personally, but I've spent about 2.5 hours in discussion with him, which is certainly more discussions I've had with anybody else on the Fed Board of Governors. But in my opinion, Stephen Miran is the perfect outline of the kind of guy you want on the Fed. And the reason why I say that is he's got all the horsepower. He's an Ivy League guy, but grew up in a much more blue collar background and ran a hedge fund, managed money, right? He hasn't just lived in academia. And when you talk to him, he gets that. He understands that. He's fully aware of what working outside of academia has taught him. He understands fully one of the biggest problems with the central banks. There's not enough practitioners. I just thought that that was a very smart, even if it is temporary appointment. And based on what I know of the guy, I'm going to keep my fingers crossed that he gets a full-time appointment. I'd love to see him on the board of governors.
I mean, I have my beefs with Steven on especially trade policy for sure. But I like Steven. He's there's so many people in the Trump sphere that personally not a big fan of. I don't appreciate their thinking. I don't trust them to be deep, when it comes to their rigor intellectually. But
To be
Steven,
to
like,
be to be fair, Chase, that's a common issue you have with people on both sides of the aisle, though.
oh, it's just that's just a problem I have with humans, I think.
Yeah,
Uh,
yeah.
but Steven fits the bill for all those things. Like he's a super thoughtful guy. Clearly, he's smart. He thinks about this stuff like deeply, writes about it deeply. Like it's not like you don't have to worry about that. And the best part of it to me is having a real sparring partner on the committee to make those debates even better. Like if you think about it, what we were talking about earlier with it, like the biggest reason Powell is afraid to go cutting hard is he's afraid that the tariffs will be inflationary and maybe not just a one-off inflation. That is a genuine debate. Like no one has the intellectual high ground on because we don't know. And clearly most of the Fed board, I would say, is kind of that thinking. They're like, oh yeah, this is probably going to be inflationary enough for us to like at least chill out and wait for a little bit. Having another person to come in and explain why they think not inflationary, I think will add to the robustness of the debate. And I think that's a good thing. No matter how anyone feels about their opinion on that stuff, like it's just good to have the debate.
Yeah, I totally agree. And every debate, I mean, you can't have a debate unless you got dissenting voices. And I think that's been the biggest problem I've had with the FOMC for so long is
Yeah.
when you got the entire FOMC and the entire Fed Board of Governors, you don't even need them to have their own resumes or their own CVs. You can just use one of them. They're all exactly the same. You know what I mean?
To be fair, Stephen's another one of the econ PhDs, but
Well, he is an econ
I know,
PhD, but he's run a hedge fund and managed money. So, I mean, that makes him a huge outlier as far as the FOMC is concerned. I mean, Powell's had his own time in private equity, but Powell wasn't a PM. He didn't run a
no,
firm.
he's a lawyer. Yeah.
Yeah, I mean, so the other thing with Powell, the other thing is if everybody's saying it's all political with Powell, man, Powell's got a lot of ties to private equity, and they have got to be hitting him up
Oh
at the
yeah.
cocktail
Oh
parties
yeah.
asking for interest rate cuts. So I like I'll stick to my story on Powell. I think his interest rate decisions could be very much politically motivated, and I think it's entirely possible that they're not. He could just be looking at the data. I think that he has a totally rational, defendable position. Um, doesn't mean he's not playing politics, but um, I think he's done a pretty good job. And I think if we end up with another Fed head, now I'm basing this on recent history, but I think if we end up with another Fed head that's as good as him, I don't think that's going to be a bad outcome.
No, not at all. I reserve judgment to see what they end up doing. It's kind of obvious they want a fairly malleable person. So to see if they pick someone that will have some independence, that's going to be important to me. And I think at the end of the day to markets. Now, I do think obviously the path we're on is one that leads to a fully subservient Fed that just prints all the money that the Treasury needs. Like it's just where we're going, and that has nothing to do with who's in charge. Like I don't care
No,
if Mom Donnie is the next president. Like that dude's going to need them to print money. so
Yeah.
that we can get out of this thing. Now, trying to keep from doing that as long as possible, like all that stuff makes sense. And Powell is like went out of his way to say like that I'm not here to, just go printing up for what they do for fiscal. Like if we go down that road, that's really dangerous. And he's right, but they're going to go down that road.
Yeah, it's
Eventually. Yeah.
I think it was inevitable as early as 2009. When you start this game, it's, like you and I have been saying it for years. It's an economic roach motel. You can go in, but you can't get out. And so anyway, you got anything else, man? Like I said, it's kind of, these are the kind of doldrums of summer where there are big things happening. Markets are way less reactive to it. It just kind of feels like we're in that kind of doldrums of summer space here a little bit.
Yep. One small thing that I noticed in some of the international data is I've been talking about like, hey, like China's getting serious about the consumption side and like trying to stimulate that way. And it's in the data. It's been in the data for like the last 2 months. No one's given any credit yet. But again, in the last few days, we got a really good services PMI out of China. And then their import numbers were way better than expected. So like it's showing like they're getting serious about doing more domestic consumption.
Which also perfectly correlates with the data we're seeing out of Australia as well.
Right. Yeah. Australia, like a lot of data coming out of there, really, their PMI was really, really good. Like it all kind of ties in to me. Like just Asia writ large just looks, I don't know, it just looks really good. And if you look at, China today, yeah, they export a lot of stuff to us. But if I think about what China's doing in 20 years, it's exporting to these massive middle classes all over like Southeast Asia and stuff. And they're making huge headway in that right now. Like BYD's sales are growing like crazy throughout Southeast Asia and stuff. So just something that kind of stood out to me.
Yep. No, I'm with you. And no one's catching on to that one too. But I think I think it's caused by when the ridiculous nonsense meme stocks and the crap coins start running in this market, everything else just kind of stops and waits. I think a big move in Asian equities is probably on the table in the next 16 to 18 months.
Yeah. And I mean, you look at the year to date, it's already been really solid. Like nothing's keeping up with Greece up 66%, but a lot of stuff's like, South Korea's having a great year though.
God dang, I wish we could have got more of that Greece ETF. Yeah. Anyway.
You and me both.
All right, pal. Well, that does it for me. We will be back tomorrow. And it looks like it's been my conflicting issues, but it looks like we're going to get that interview with that head of AI for one of the big Meg 7 companies next week. So I'll firm that up today. But anyway, hope you guys have a wonderful evening. As always, catch us on social media, on YouTube. Just search Know Your Risk Podcast. Go to knowyourriskpodcast.com. Easy to find, bulwarkcapitalmanagement.com. You guys know the drill. We'll see you tomorrow. Have a wonderful evening. You're listening to Know Your Risk Podcast. Download and subscribe to knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.